and $2. I mean,
That's funny. That is really funny.
okay, you're not recording that part, right?
No, I'm not. I'm not absolutely
Okay.
not recording that. Hold on. Let's see. Bluetooth. Trying to connect my earpiece so I don't get echo. Let's see here. Oh shoot, we are streaming right now. Okay, we are streaming to YouTube as we speak. Yeah, you're live on YouTube right now.
On three. 1, 2, 3. Well, hi, Jeremy and David. This is Steve Kwan, also known as Kwan. I would say that
Oh.
how could
Hey,
one?
hold on. Let me do the intro. We're live. Let me get a
Oh,
virtual background here
he's driving
so
with
people
blue
don't even
sunglasses.
know that I'm in my car. Oh, should I keep the sunglasses on, or what do you guys think? Looking
I
pretty
think it
cool.
looks good. Yeah,
It's really bright
you,
where I am. I'm
you look
sitting in a
you
parking
look
lot.
very crypto. Where are you actually?
Okay. I'm in a parking lot in the Coin Genius parking lot. You see that? The Genius Wednesday.
There you go.
Okay, here we go. We are live. I'm going to hit record on our stuff as well. Okay, so we're good. So everybody, thank you so much for joining us on another Genius Wednesday. Today is Wednesday, February 17th. Crypto markets are going freaking parabolic as usual, at least lately. You have, Bitcoin right now is over $52,000 per Bitcoin. You have Ethereum at 1,849 bucks, Bitcoin Cash 719, XRP somehow is at 54 cents, and Litecoin, one of Steve's all-time favorites that he's been talking about for a long time. And I famously made a statement, just like Ethereum, getting into Litecoin below, what did I say? It was like 75 bucks
Below
was a real
40.
deal. Yeah, maybe 50 bucks. I can't even remember. So that's at $234. So the market's green across the board. Let's talk about it. I know, David, this is once again, like you said, a victory lap. You know, Bitcoin at these levels is just something that I don't think people psychologically could fathom, at least people that were not long-term believers. But we're here, right? Some of the biggest companies in the world are putting it on their balance sheets. Governments are taking this seriously and putting it in their reserves like other countries. This is really happening. All the things that we've talked about, all the things that the early adopters of Bitcoin have hypothecated for, have written books about, and told you it was going to happen, is coming to fruition. And it's really incredible to be a part of this, because this is a once in a lifetime movement, and we're really right here at the forefront.
I think something you just said is really important about the once in a lifetime part. I mean, look, sometimes there's a lot of hyperbole when people talk about trading stories. I mean, I've heard once in a lifetime opportunities from things as far flung as Micron when they were first doing semiconductors and all sorts of
I mean,
other.
I remember that.
Yeah, I knew some analysts used to call it the flying pig because it never made money. I mean, for like over a decade, it couldn't make money. And that was before not making money was de rigueur in Silicon Valley. But the point that I think is important about Bitcoin is something I tweeted about not too long ago, is that there is a very big difference between an investor and a trader. And people need to understand that. So when a trader says, I'm taking profits here, I expect a short downturn, that's very different. An investor needs to understand the difference between that. If you're not trading and glued to the markets, then don't trade. Whereas people have a tendency of over trading. So what ended up happening here is in the news flow in Bitcoin over the last couple of weeks has been nothing short of extraordinary. So, everyone knows about Elon Musk. Everyone knows about Michael Saylor hosting a conference where 1,400 corporate CFOs and CEOs were paid attention. 5% of them said that they can see putting money into Bitcoin on their balance sheet. Those are very big numbers. You also had one of the Fed heads, Bullard, out basically telling anybody who wanted to listen that he didn't see gold's price at any point over the last decade or Bitcoin's price as a threat, meaning that if Bitcoin rose to be the same price of gold, it's a big snooze to them. Well, if that's the case, then one of the single biggest pieces of FUD, standing for fear, uncertainty, and doubt, that the Fed will come in and regulate Bitcoin at some point around these price levels is completely insane. They're basically saying they don't give a crap. It doesn't matter to them. Maybe if Bitcoin goes to 500,000 and then starts approaching 1 million or more, then maybe they'll take notice of it. But certainly in this time frame, they don't care. It doesn't matter. It's not going to affect him. He won't be at the Fed by the time that happens. So those are very, very big deals. Now, the second thing that's a big deal, that is, it's actually from one of the biggest opponents of Bitcoin, who mistakenly made the bull case really, really well. And I would happily, and people can retweet it or say whatever you want about it, I would happily debate Nouriel Roubini for basically making the Bitcoin case. What he said is, and I quote, let's see if I can get it right.
Let's go, Nouriel. You heard it. David's calling you out. So if you're hearing this,
totally,
with
he
all the few
basically
people that are
said
watching
the
right now,
bubble is self-fulfilling. So it's a self-fulfilling bubble. To which I responded, and will happily explain, that money, whether it's gold and silver or seashells before it, it is all based on social acceptance of value. So if the bubble in Bitcoin, and I use that word with air quotes, really is self-fulfilling, meaning people all believe it, well, then it becomes value. And that's really, really, really important. That is really important. And I don't know I can't stress that enough.
I'll give my 2 cents that I did not expect this. I actually am not a holder of any Bitcoin now. I know that's crazy, right? But I do own some other things, namely Litecoin. But I mean, the outperformance of Bitcoin to pretty much what I'll say the top 25 projects by market cap is astounding. And it's not dragging them along nearly as much. Where you go back to 2017, Litecoin was 230. It is again. Bitcoin was 12,000. Go back to 2017, Ethereum got up to 1,400. Bitcoin was 13,000. And I actually have a metric that I was just working on for projects that did ICOs or capital raises a couple years ago. And I would say that if a project raised, let's say they raised, I don't know, 10,000 Bitcoins and they value themselves at X, and their project, what is their project worth? Would you have been better keeping that or investing there? Because there are some that obviously underperformed, others that overperformed. I look at, instead of calling something a bubble, I think, David, the Wall Street and us might agree that it's price, it's liquidity. Like right now, today, somebody is willing to buy and sell at 52,000. And in March, someone was willing to buy and sell at 3,500. Which price is right? Well, both prices are right. They were right at that time. I guess
you got to be careful. 3,500 was bullshit. That was never the right price, but because it was at the bottom of a major futures-led price-insensitive liquidation. But pre-March sell-off, it was trading between 8,000 and 9,000. Post-March sell-off, after the rally, was trading 8,000 and 9,000. It stayed there for a long time. So your point is still well taken. Was the 8,000, 9,000 level the right price, or the 52,000 level the right price? The reality is the right price is what people are willing to pay for it. I'm going to say it again, because I was explaining Bitcoin to someone who didn't know anything about Bitcoin today, who works at a major firm in the traditional financial. And I basically started explaining it to him. And halfway through my explanation, he said, oh, so you're telling me Bitcoin is priced like an option? And I laughed because both of you have heard me say Bitcoin is priced like an option. It is either going to reach that digital gold plateau, which is approaching 400,000 to 500,000, which is will get it to its 10 trillion market cap, or it is going to retreat towards a niche status or worse, which is probably back to that 8,000 to 10,000 again, and stay there. And the reality is it's an option, but it's an option with an asymmetric upside. If you view the likelihood of Bitcoin getting to that digital gold status as 50-50, and there are plenty of people in the Bitcoin world who think it's much higher than that, then this price is crazy cheap. I mean, people like Pierre Rochard will say it is the most undervalued asset because I understand how to value it. It is clear. You don't have to guess. With Ethereum, you're guessing. I'm not saying it's wrong, but you're guessing. With every other token project, you're guessing. With Bitcoin, you're saying, okay, this is it. It's either gold or bust. And that, I don't know what you put your probability at, but if you put the probability at 10%, you could justify buying it here really, really easily. If you put it at higher, then it's a screaming buy. And that's the issue. It's really, really simple. Whereas if you look at Ethereum, Ethereum may, repeat, may become so in demand because it may become the backbone of the entire new financial ecosystem as DeFi replaces CeFi. I think it is inevitable that will happen, but it's not certain that it will be based on Ethereum.
You remember Sports Center? I got that not so fast moment.
Okay.
I held Ethereum and I remember buying it under $100 this year, actually. And I do believe that being the first quote unquote smart contract at whatever price it ends up, whether it's a penny or $1 million, like it changed the game. Like Bitcoin changed the game in cryptocurrency and hashing and using a computer to bring something to life, where Ethereum, I'm going to guess a good chunk of it is in wallets like Exodus or whatever, where I'm not using the smart part. Well, I'm using the smart part myself, but it's just a linear, investment or parabol, whatever you want to call it. But I will point out something that I've talked to some independent people, both small and large, you guys that have $1,000 and guys that have 8 figures. There's been a noticeable increase in transfer fees, and there's also been a noticeable backlog. And I guess I don't know what the correct term is, but they're side chain, like the stable coin things, USDT, USDC, BUSD. And by the way, BUSD and USDC are as good as gold. I didn't know too much about them, but they are accepted by the bullion dealers and they're accepted by banks. Oh, wait, they will be, sorry, but you didn't hear that here. So the problem is it's upwards of $50 to transfer Ethereum now. And when exchange or transfer Tether or USDC, when exchanges don't keep up with, I guess, the Joneses, where they're keeping up and moving their transfer fee, things get stuck like for multiple weeks. And that is what? Okay. Hey guys, I got an emergency. Just let me step away for a second, okay?
But let me address that briefly, because I think that is a big problem. And when people look at Ethereum, you get multiple camps. You get the people who say, well, we don't know what the supply will ultimately be. I think that they've gotten that more or less under control. You get the people who talk about staking is going to take so much off the market, the supply demand will make it rip. And there's logic to that. But there's this big concern about the gas fees and the congestion on the network, which is why Polkadot, something that I was remembering, is, if Jeremy probably remembers this over the summer.
Oh, I sure do.
I was yelling about Polkadot at $5 or $6 at $4 too, and that's now at 32. And the reality is it's done very well, and there are new things coming out there, and there are other chains that are coming out. I will continue to make the statement that the ecosystem of non-Bitcoin crypto, despite what Bitcoin maxis say, I don't know which ones will be winners, which ones will be losers. I don't know if the winners are even listed yet, although I suspect they are, or at least some. But I'll bet that the asset class itself will outperform virtually any other asset class out on the planet as the financial system becomes distributed. But it is not as clear a use case or as clear an investment thesis as Bitcoin, which is why that investment professional types, corporate treasurers, and others are going to flock to Bitcoin first before they move into Ethereum and Chainlink and Polkadot and name it. It doesn't really matter. There are many other assets. So I think that's kind of the point I was making, not that it's better or worse. And for what it's worth, from a technical point of view, Bitcoin goes up, everything goes up, but Bitcoin has been going up more recently. Bitcoin takes a breather for a few weeks, and during that period of time, you get what all of the technical traders call alt season. And during alt season, people are taking all their profit from Bitcoin and plowing it into things that they are hoping will go up by a factor of 10, whereas Bitcoin might go up in their perspective in the next couple of months by 20 or 30%, which is not nearly enough adrenaline rush for some of these guys. So
Agreed.
You have that going. And so that's what I was getting at with traders and investors. Investors are saying, listen, if I can get 10x return in the next 5 years, I am happy to buy Bitcoin, stick it in a vault. 5 years from now, it's going to be worth 10 times what it's worth. I am happy. There are adrenaline junkies, and you know that this is happening because of the sheer amount of leverage in the crypto ecosystem, who are only interested in buying what's going to go up, make them double-digit percentages in the next week or two. And that's a very different audiences. Those are completely different types of people. The first are the original diamond hands, and the second are weak hands that claim to be hodling but really aren't. Because what they're doing is they're buying something and taking their profit and plowing it into something else and going back and forth. And at the end of the day, who knows whether they would have been better off just holding in the first place or not. But most traders don't tend to make money. The good ones make money, but the average ones don't, because there's spread costs and commissions and fees and et cetera, et cetera. So it really is important when you're watching this or thinking about the market as to what are you trying to accomplish. If you're trying to accomplish being on the forefront and trading 10 or 15 times a day in and out and think you have an edge, by all means, go for it. But if you don't, and you're not focused on it and you're doing it casually, then pick things that you believe in and invest in them. And yeah, sure, you can lighten up when you've had huge profits and you think that the market might be soft with the expectation of getting back in, but just be ready to plow back in anyway if it doesn't collapse, because you don't want to miss the run that you're expecting if that's what your thesis is. So it's really kind of important advice to people. It's what I've been telling people on my team. My company, we're a software company, right? We produce software for people to trade this stuff. So we could look at it all day long and with incredible data. I mean, I was looking at the data this morning, doing a teach-in to somebody, and I noticed that at that instant in time, the order book was massively overselling rather than buying. And I said, oh, it's going to drop. He goes, what do you mean? I said, it's going to drop 100, 200 bucks. After that, who knows? Might go right back up again. Don't know. That was it. And at the end of the day, 10 minutes later, we looked because we were doing something else and the market was $200 lower. I mean, if you were willing to trade for that $200, you could make money, but you have to be staring at it all day long or running computer algorithms that are looking for that thing and having it react. If you're doing it casually, really bad idea, because it's going to wash you out. That was like 51,000 something. And you don't want to get washed out.
True.
Right? And so you might have made 200 and lost 2,000 or lost 1,000. It's just you just need to be concerned about what you're trading, what your time horizons are.
So David, quick question. So for those of you who don't know, David, why don't you talk a little bit about your company, what you guys do, and why you have an ear to the ground, and so to speak, in terms of the analytics and how people are trading?
Right. So I'm the CEO of a company called CoinRoutes, and we have a platform for both dealers and trading firms and traders to professionally use algorithmic trading to buy and sell pretty much any crypto asset on pretty much any centralized exchange or with any market maker. And we're in the process of adding decentralized exchanges as well, although you really need large size to cover the gas fees for that to make a lot of sense. Uniswap is really good if you're buying 400 Ethereum at a clip sometimes, but not terribly good if you're buying 4 Ethereum at a clip. And so, because the gas fees are high, right? So it just costs you. So the reality is that our software, we're processing about 10 terabytes of market data a day. We process every tick. Right now, in memory, we're looking at somewhere north of 10,000 price levels of Bitcoin pricing across pretty much all the exchanges that matter. And we do the same thing for Ethereum and Polkadot and Graph and Chainlink and Ren and SNX. We cover like close to 750 pairs, and we add them whenever our clients need us to add them. So we provide people to buy over time, at a point in time, via passive methods, aggressive methods. Everything we do is informed by that market data. So we're constantly looking at the data. Like I'm looking at a screen which shows 20 different markets competing for what's the best bid for coin, for Bitcoin right now. And with one click, I could do the same thing for any other asset class. So we're always looking at that data and looking at how things move up or down, or how the exchanges trade to one another compared to one another.
Based on all the analytics that you're seeing right now, how healthy would you say is the market?
Oh my God, it's crazy healthy. The only thing about the market that's really most interesting right now during the day, during the trading day or during and I mean the trading day is 24 hours, so I don't mean just now, but I mean, except during weekends when the liquidity gets kind of spotty.
Yeah.
The market is very healthy most of the time until there's a big gap. Every once in a while, someone does something that could best be described as dumb. I say dumb, but it could be manipulative. But the reality is every once in a while, someone will try to sell or try to buy too much at one time in one place and drive the market. And also, there will be times when futures get liquidated. We saw some of that last week, which was really interesting. And then you have price insensitive selling that has to be sold at any price. And when that happens, you get dislocation. So there are times when you might see it. Like over the weekend, there was a period of time when, I won't name the exchange, but a US regulated exchange was $400, consistently $400 different in price than most of the other regulated exchanges. Now, it was a relatively small exchange for small size, and it took like 10 or 15 minutes, and that went away. People obviously made money on the arbitrage, but for the most part, that doesn't really happen anymore. It tends to happen more on weekends when people are not sitting at their desk ready to move coins back and forth to arbitrage. But during the day, it's very, very healthy in general. The liquidity is there. It's just, as I said, the data quantity is just amazing. I mean, this Sunday was so much. We've never seen this amount of data on a Sunday during one of the price moves, where it was so much that we actually had to fall back to one of our servers were going under routine maintenance. And during routine maintenance, we're running at 50% capacity, and usually we have like double headroom, so we thought it was okay. But it had 4 times the normal amount of data on a Sunday for a period of time. So we now know, how much headroom. It just happens, it's just the way it goes, because all these markets are very interconnected, and interconnected markets will cause cascades of market data. And so people who think that they understand it could just build a simple algo to trade this stuff. Well, you can, but you're going to miss a lot of what's actually happening. And so talk
about like the order books. I mean, the order book to you has told you so many different things in terms of momentum that's going up or down as it relates to Bitcoin, how that trickles down to other coins. To your point, everybody who's a trader right now, I mean, it's almost like, to me, what's happened on a macro level from a trading perspective is that cryptocurrencies got people to fundamentally look at trading differently, right? This is not like buy a stock and hold it. This is 24/7. How can I get a hit, right? How can I get a hit of this adrenaline, right? And it kind of had this crossover, this flow over to traditional traders, to where they were looking anywhere for that quick hit, which is why you saw a lot of people come in to, Robinhood and the likes of others, and why you're seeing the price movement of even traditional stocks emulate that of cryptocurrencies and the volatility associated with it. So it's pretty incredible to see, like, fundamentally how this has changed how traders around the world look at investing in assets. And it's opened up to an entire new world of traders, maybe that were at a much lesser age than the typical average of traders. You know what I mean? So I don't know if you're seeing the same thing, but I mean, I've seen from the macro perspective, like, this has really changed the game. And I think it's continuing to evolve and attract new people.
I mean, I have a kind of a unique perspective on this, because pre-CoinRoutes, one of the more recent jobs that I did was I actually started the last successful wholesale market maker that entered the space. So I ran Two Sigma Securities and started it. Our job was to take the other side of orders from places like Robinhood and all the other retail exchanges. So we're one of those people, smaller than, but still significant than Citadel and Virtu, but right there with Susquehanna. And what we can tell you is retail as a whole, individual orders are uninformed. Retail as a whole can become informed in certain sectors. The reality is people who trade too much, if they're not focused lose money. It's no different than, and I know people hate this. Stacey Cunningham had an interview the other day. She runs the New York Stock Exchange, and Stacey's awesome. But when she tries to say that the stock exchange is nothing like a casino, it's like, well, it's not its function, but don't tell me that there aren't people who treat it like a casino, because that would be a lie. The fact is, in Asia, back before the internet, most stockbrokers had amphitheaters, literal, actual theaters to watch the tickers, so they could buy their stock and sit there and cheer it on. I mean, the stock market is, in some people's mind, just a casino. Crypto trading is a casino. People like to bet. It's like
look at
playing Keno.
Blockfolio. Like Blockfolio was so successful because people wanted to see their assets in real time, and they wanted to swipe down, and they wanted to load. And as soon as there was a change, I mean, it was this dopamine release in their brain every single time. So to your point, I mean, and now it's 24 hours a day,
so the thing about it is that
game changing.
But what's interesting about it, and why it's really important for people to understand, is the same dynamics that you might be looking for could actually cost you money. So if you're looking to build wealth as opposed to dopamine release in your brain, you're going to not do the same thing. The dopamine release in your brain is interesting because what happens, and the reason that casinos are so successful, is people remember the big winning streaks because they are awesome. When they go on a losing streak, it's like, yeah, but it gives me a story to tell. This is not great for building wealth, but it's awesome because you get dopamine and you get the opposite, when you get depressed. But the reality of the situation is you come back from the depression, you get another hit of dopamine, and it's great, but it might be that over time you don't make as much money as if you had a more conservative strategy that took into account what your valuation metrics are, which is why I come back to Bitcoin. If I want to trade momentum in something like XRP, I'm trading momentum because I have zero belief in the use case. And more to the point, even if I was the biggest supporter in the XRP army, even then, I would still know that the wrong settlement with the SEC could bankrupt me. I personally tell people I never want to bet on something that I have no information, or the other guy might have more information than me on. And there are people out there who have much better information on what's going to ultimately be the disposition with XRP than me. So I don't want to bet on that. That's not to say that I think there's anything wrong with it. If you have that kind of stomach, you want to take that kind of bet, that's up to you. I just personally don't do that. Bitcoin is a bet I am willing to make because I believe it's going to be worth over $500,000 a coin. I think that it will get to digital gold status. I think it's more than 50% likely. And I can't believe the market is giving me this chance to make this much money with this high of a certainty of return. When I look at Ethereum, my brain tells me that it potentially could be explosive, and therefore I am long Ethereum too. Could be explosive because I think smart contracts will ultimately revolutionize finance.
They already are, right? I mean, it's just incredible to see what's happening. I mean, I see posts now all the time on Twitter. These guys that are just taking advantage of DeFi that got into BlockFi like early on as an example, right? And they just made their first $1 million on the yield generated from just leaving their Bitcoin BlockFi. I mean, it's really incredible. This is changing people's lives overnight if they can hold, which is really hard to do. And it kind of brought this idea in my head in terms of what you were trading and the psychological factors associated with trading, and how most of us, including myself, are not really good traders at the end of the day because you let emotion get in the midst of making sound decisions. Because I know in my head that how you create generational wealth is by holding Bitcoin for a long period of time. But then the other side, right, you get these flickers of news and different things that entice you to want to get back in the market because you think you're smarter, but you're not at the end of the day. And then you get completely wrecked. So it's almost like somebody needs to create some sort of trading tool to be able to trade. And as you make these good decisions, because a lot of times you make good entry decisions and when to get in or when to exit, it needs to almost take your profitability that you're making and just take 20% off the table and locks it up so you cannot touch it for the next 5 years. And you set that parameter. I don't know if something like that exists, but I'm telling you, it would protect a lot of traders from themselves.
Let me put it this way. So I spent a nice slug of time at an awesome firm called Two Sigma. Two Sigma is now a very large, diversified, quantitative hedge fund. But the founders used to say a bunch of things. David Siegel was relatively famous for talking about the fact that it makes no sense to have humans completely run investment processes because they can never be perfectly disciplined. Now, it also is true that even at Two Sigma, that you don't want to allow data mining to go into, to basically run your shop, because it could be the computer will make a decision on the basis of flawed data. And so you do want to have judgment and intuition fit into the algorithms themselves. But the fact that you're disciplined in the application of that is absolutely essential. So what you're describing is whatever one's thesis, and that thesis could be a fundamental thesis like mine on Bitcoin, or it could be a thesis on the basis of relative value and momentum. It could be anything. But whatever it is, when it happens, you ask yourself the question. Most people, what they do is they say, oh my God, look how far it's moved. I should take some money off the table. And the answer is, well, what was your thesis? If your thesis was, let's trade this until such and such a thing happens, and if such and such a thing happens, and you say, well, it hasn't moved far enough, I'm going to stay in it, and it goes up a little further, you think you're a genius, and then you say, well, that thing already happened. I forgot what my reason was. Now all of a sudden it peaks and it drops down and it goes well below your exit level. Now all of a sudden you're not so smart. And the flip side of it is, what happens when such and such a thing doesn't happen yet and you sell out? I mean, there are a lot of brilliant people who bought Amazon at 90 and then sold it when it got to 200 or 300 and thought they were geniuses until it got to 2000. And that's
what this is, David. And the reason is you and I should come up with let's come up with a trading solution. I'm not kidding, where it's called like thesis trading, right? You incorporate your thesis, and literally the system, you can choose your entry points, but it literally beholdens you to what your thesis is, because it's like we have to protect ourselves.
There's only one way to do
people
what I
for
know
themselves.
Yeah. There's only one way to do it I know of.
What's that?
That's to block your investment into a smart contract triggered upon a thesis where the only out is something that's quantifiable.
Right.
And yeah, I'm sure that people are going to come up with that, because you could do it.
Yeah.
You could build smart contract applications where you lock up USDC into a contract that's going to invest it in this, this, and this, unless these external events happen. And otherwise, you're stuck. It's there for the next 5 years. That's your retirement fund. Go away. Come back 5 years later. Yeah, there's no reason why you couldn't do that. I don't know if people would sign up for it, because people generally don't want that. But that is quite literally something that is possible with this technology. I haven't really thought about building it, because I just don't think it's human nature. I think human nature, people always second guess themselves. That's why there are some very successful traders that completely defy efficient market hypotheses and completely defy all randomness, but are very successful. But that's because they understand how to be disciplined, how to stick to their thesis, how to understand what is new information, and how to interpret that information. Those are non-trivial skills. Most people don't have them.
I'm looking at something like this in the NFT space, because we've seen what's happened, obviously, with NFTs. Getting in the space initially, I would buy into something and I'd flip it, and you could make, 3-4x or whatever the case may be. But what happened is I realized over time, I'm like, why did I freaking sell that Beeple piece or whatever the case may be? Because, maybe I bought it for a few $100s and somebody just sold it for 10,000. And it just goes back to like crypto really is about the hodl, right? It's about the long-term game. And it's so easy to get blinded by a quick profit. And if you can just hold, so I'm trying to create this thing to allow people to lock them up. And once again, protect them from themselves. They can set the time frame, but basically allow them to lock it up in such a way to where they create a collection, they hold it, and you come back to it in like a year, 2 years, 5 years, whatever the case may be, and then you can sell it. The same thing goes with crypto. There should be some sort of vault to where if you really wanted to, you could send it there and you literally can't touch it or trade it for a predefined amount of time. And I promise you, it will create so much wealth for people. It's ridiculous.
Yeah, it's interesting. I mean, it's always the single most important piece of advice I give anybody who's starting out in trading. It is make your plan and stick to your plan unless information changes. And if the information changes, of course you change your plan. But if it doesn't, and that information isn't price movement, that information is everything but price movement. Price movement, it has to be caused by something. If it's caused by something, that's fine. I mean, if you bought Bitcoin because you think because you think the world is about to print yet another, slug of $3 or $4 trillion, and let's say something weird happens and every one of the central banks in the world changes their policy and they say, you know what, we're not going to monetize any more debt and we're going to go to a gold standard. Well, if that happened, the use case for Bitcoin slams shut, and I would sell my Bitcoin. I don't care what the price is. But the likelihood of that happening is about the same likelihood as me being the starting pitcher on opening day for the Mets this year in baseball. Forget the fact that I'm over 50. The fact is, it's not going to happen. But there are investing theses that do change, and people should just be cognizant of that.
Yeah. Speaking of that, so let's go back to last week. What was your pick? And remember, we're going to hold each other to a week. So we said, what coin am I looking at? And once again, Josh isn't here this week. This is not investment and financial advice. Seek your own help with a professional. This is just what we're doing, what we're thinking. You don't follow us. You do what you need to do with your own money.
Well, last week I picked Bitcoin because it felt to
Good
me
choice.
like it felt to me like Bitcoin was either going to go toward 50, which I thought was baked in the cake, or stay where it was. And if it stayed where it was, I felt that the altcoin market just didn't really have it. And we saw a little bit of a weakness in Ethereum, going into the week, but Bitcoin's done pretty well. This week, I guess that's the next question. The coin that I like the most, that I don't know if it's a 1 week thing or a 1 year thing. I mean, I don't know. I still think Bitcoin's going to make an assault at towards 60 this week. It probably won't. It will probably stay around here. At least I kind of hope it does, and do very little over the next week or two. I think that every time it gets to these levels, it will sell off at whatever. I think it's going to probably stay around here. I actually think that's long-term bullish, and I'm talking my own book because I'd like to see it march, up to over, my year-end target was 140,000. So I think that it's healthier if it stays every time it gets to a new major price level for some period of time. But I do think when we next takes a break and there's alt season, the coin that people are going to start looking at, one of them is VeChain, VET.
I 100% agree.
Which has
it's sitting there waiting.
It has a lot of contract. It feels like it's ready. I think that's one of those ones I'm going to have to pick for like weeks and weeks in a row until one day we wake up and it triples. But that, I guess that's my pick. But I will say I do think Bitcoin has a march to the mid 60s before a correction. And I don't know when that correction is going to happen. But the one thing we do know is it's not going from here to 100,000 without at least 20 to 30% correction in the middle. At least that feels like almost impossible.
So my pick, it's going to be tough for a week. I'd say the graph is really interesting to me. This is brought to my attention by a few people in the crew. But yeah, the graph has done very well. I think there was an incredible buying opportunity for myself. Once again, this is not investment advice. Went back to $1.80. I got back in. I think that has potential to go much higher. I think fundamentally what they're building is very important. And if they accomplish that, then I think we're going to see something similar to what we saw with Chainlink, right? Chainlink came out, Josh Lawler started talking about it. We all thought it was, something fundamental that was needed in the industry with the Oracle network and validation of data. And they did a really incredible job, and they built this network, and their price rose accordingly. And a little bit more with stability, I would argue, than a lot of other coins out there. What I look at too, and I know this is like next week, and that's like GRT is pretty interesting to me. But there's also some things that can't be forgotten, which is, to your point, you mentioned this earlier, at some point, I think we've almost seen like a mini alt season already because they've risen so tremendously over time in conjunction with Bitcoin, because it's risen parabolically, of course, so they kind of shadow it. But as Bitcoin, to your point, becomes less interesting for a couple weeks, 2-3 weeks, people are going to go to where the money is, right? And they're going to just go take their profits and they're going to reinvest it in some of the alts. And the ones that are interesting to me, maybe not immediately, but like once we get to a real alt season, is looking at stuff that is still around, that has incredible market capitalization, maybe over $1 billion. And you look at things like Dash, Zcash, ICX, Verge, Neo. And the reason why those stand out to me is if they ever, I'm going to tell you why, okay? XVG.
You know what happened with Verge in the last week, right?
No, I'm completely out of the loop. What happened?
Look, Google it.
Okay.
Google the Verge and you'll see. I don't know the whole story. But there was
I'm gonna have to look into it.
There was a block reorganization, and
Okay.
so I don't know what's going on with the crypto, but
Well,
that to me would be a major red flag.
Okay, so take that one off the list. But I mean, still, actually, that one's not as interesting. But if you look at all the other ones, the reason why these are interesting is I'm looking at the supply and I'm looking at all-time highs. The all-time highs in which they've hit a lot of coins have actually reached their all-time highs that they hit back in 2017, 2018. But things like Dash, I don't know what it is right now, but this is research I did late last week. It was 164 bucks. And at some point, the all-time high was 1,600 bucks. Zcash is about 140, all-time high 4,200. Icon, $1.33-ish. It's probably higher than that now. All-time high of 1244. Neo, 37 bucks roughly. All-time high of 196 bucks. To me, that's very interesting. And if Bitcoin continues to go towards 100K and there's some sort of parabolic rise of these alts in the meantime, in my opinion, it's just a matter of time that these are going to reach those all-time highs at some point. Because I don't see any of these projects, maybe other than Verge, really going anywhere. They've held their market caps for quite a while. There's a tremendous amount of holders and supporters of these projects. To me, it's just a matter of time, whether you believe in the project and the fundamentals and technology or not. I don't really think matters at this point when you're talking about Bitcoin at 100K.
I think you may be right. I mean, look, at the end of the day, Zcash is its own strange thing because of the issue with people concerned about privacy coins, right? I mean, there are a lot of believers in the project, and frankly, my worldview says there should be a use case for that people really care about, and the technology makes a lot of sense. It's a question of, is the AML world going to allow it? That's where that's the thing that holds that back. Dash is is a less privacy oriented, but still more privacy oriented than Bitcoin, and has much the same thing, to the point where there are exchanges that drop them from listing because they're concerned about having the government be mad at them. And so those are the sorts of very interesting questions where, I don't know what to make of it, right? Because sitting in America, it's different than if I'm sitting someplace else. Sitting other places, I might have much more of an appreciation, right?
If you haven't seen this, and I'm going to go back to the NFT space, because NFTs are fundamentally changing how people are interacting and coming into, I would say, the blockchain and crypto space, because it's just an easy sell. Like, you're selling them with art first, and then they're learning about the fundamentals of, holding. And digital collectibles are just scratching the surface in terms of what's possible. And like the company that I'm working with Bitcoin Origins is proving that, right? Because we're telling a story using NFTs. But I don't know if you heard of this. I think this might be interesting for you, David, is what is it called? Wolves of Wall Street.medium.com. You can look at their article there. But the Wolves of Wall Street is basically bringing NFTs together. But the NFTs, yes, they're art and they're these different characters, but it's literally tied to a portfolio. I know they did some sort of, it's SFT crypto portfolios. It's tied to real money in these real portfolios. So as you're holding these NFTs, you're getting exposure into some other stuff that's going on, whether it's like traditional capital markets or probably most likely crypto. I know it's built on the Yearn protocol. So there's some really interesting things that are popping up that I think are going to really appeal to the masses, because you're almost talking about gamification, right? By doing digital collectibles tied to the physical backed products and or crypto backed assets. And I think that's a really interesting play. I didn't know if you've heard of that or if you had any thoughts around that or where that can go. But I mean, what kind of use cases do you think could be in play along those lines?
I mean, I'm not an expert, and I don't have a lot of time on it. I mean, the last thing I think about your original examples when you were talking about wax. I still have a baseball card collection from when I was a kid. It's probably not worth very much, but because who knows the condition of all the cards, but there are a lot of them. I have some that are preserved.
You'd be surprised right now. These things are going crazy, traditional trading cards right now.
But the reality is that it's like there was a whole big conversation with people who I follow, like the stalwart, Joe from Bloomberg. And, they were talking about the NFT space. And the thing that's interesting is as long as you can verify the both authenticity and limited supply of things like Topps' official baseball card digitally, or whoever, right? Whether it's a card or if it's a piece of art, like you mentioned, the one that is being auctioned by Sotheby's, right? As long as you can verify that, you can immediately see.
Beeple.
Yeah, Beeple, exactly. So you can immediately see the value why people would care. The issue is always, in my mind, saturation. And the question is well, how much of the value of art has to do with luck and who they got sponsored by, et cetera, which in a global, in the web, it's literally the World Wide Web, that no longer is an option. I mean, and I come back to talent, right? And I don't care whether it's singers or artists, there are a lot more talented people than ever make it. So my one concern about digital art will be, is the fact that there are so many talented artists on the planet that never actually make it or create valuable art because they're never discovered, that now have access to this. Does that devalue the upper end for digital art until someone becomes extremely famous? And the answer, I don't know. I'm not an artist. I'm not an art collector. I don't know. When it comes to scarce and verifiably constrained supply NFTs of things like, whether it's collectibles of any sort, it's immediately easy to understand the value proposition if that's something that you're into. Whether it's Magic the Gathering cards or baseball cards or hockey cards or, reality TV show people cards. It doesn't really matter. If it's something that is a limited supply that people find interesting, it's useful, right? It's one of those things.
I would agree. Here's why I can't ignore it. Not only because I'm in the space and I created like one of the top projects out there on Wax, but there's a lot going on elsewhere. I mean, you have crypto punks that are selling upwards of $700,000 for one NFT. You have Hash Masks, which is, I don't know, I think they're like reaching over 30 million bucks. NBA Top Shot. This is something that can't be ignored, and I feel like my numbers are wrong here, but I think they're raising $250 million at a $5 billion valuation. It's incredible. I mean, like I feel like they just had an investment round where they brought in $13 million for Dapper Labs, the makers of CryptoKitties, and they had NBA Top Shot. It was doing pretty well. They got 13 million bucks from, Fred Wilson of Union Square Ventures and a few NBA basketball stars, because people are like, wow, there's something here. And then all of a sudden it just went parabolic and people were just, selling these things for $20,000, $100,000 for like one card or one moment. And that's having a trickle down effect across the industry. So for me, right, because I'm a crypto trader first and then getting into NFTs and just like trying things and innovating and iterating with my own projects, and I'm learning, but it's undeniable that my crypto portfolio is lagging behind that of my portfolio of NFTs. I'm making more money on NFTs right now of buying it. Like, as an example, I bought a Beeple as an example for 999 bucks and just sold it for, God, what was it, like 10,000 bucks? I can't ignore that, right? And now I've done that 5, 6, 7 times with other different projects that I got in early, and it's still so early. So there's so many NFTs. You can't buy every project. You can't buy every painting. But if you understand the marketplace and the things that demand secondary market value and you invest in those things, I'm seeing 10 to 50x returns all day long. And I'm not joking.
No,
So,
I believe you. It's
into.
not my area of expertise, so I don't know, but I hear you and agree. But it's funny because isn't all that different than what we were just talking about. If you are an expert, or if you have the time to focus, then all of these markets can make sense. It's when you are not an expert, or when you are the person who the experts are selling to, that you have to be concerned. That's really the issue. So if you do your research and you focus and you have a plan, you can make money. It's when you get greedy and don't do research and just kind of, just swing at it, that's when you get into trouble. Now, while not investment advice per se, it's definitely meant to be educational. Yeah.
Well, one piece of advice that I can give you, David, but once again, this is not an investment advice or financial advice of any kind, is I think I found the key to NFTs, David. So if you want to get in, the key is the same thing as crypto. The ones that I've held, and by the way, NFT time, and somebody just quoted me on this, NFT time is faster than any other time frame. It's like an alternate universe. It accelerates and expands so much quicker than even DeFi, which is crazy, right? And because of that acceleration, the things that I've held, and once again, you can't buy crap. I'm not talking about the 2-cent NFTs. I'm talking about the stuff that you might have to put a few $100 down on, or $1,000. The ones that have significant names that you see them, building a repertoire like, Blau, the musician, or Beeple, or some of these guys, or NBA Top Shot. When you see something that has legs, the things that I've held, I've made more money on than I have in my crypto portfolio. The longer that I hold, and some of the things that I'm selling right now, I know that Beeple piece, I will kick myself for it. I know that's going to sell for $100,000 one day, but it is what it is. Like, I'm trying, you know what I mean? Like, you have to make money somewhere. So the key is the same thing with crypto, is hold that shit as much as you can, because it's just increasing in value. We're just scratching the surface on this industry. So obviously I'm excited about it. We'll talk more about it. Thank you, David, for joining as always. I know Steve had an emergency, so hope all is well. I think something happened with his dog. Josh will join us again next week. And until then, you guys enjoy your week. This was Genius Wednesday, and we'll see you again soon.